The market is absolutely surging today. The S&P 500 hits another all-time high. NASDAQ hits an all-time high as well. Who's left out? Why is this happening? And why could this be an ominous sign? I've got all that coming up right now. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Okay, as I'm recording this right now, the stock market is absolutely surging. Why is that happening? Who's left out? And why am I and my advisors here on my team a little concerned? So why? Let's hit the obvious one. So there's three potential reasons why the market's absolutely surging right now. And one, of course, we did get that the news over the weekend that we do have a new president-elect. Joe Biden has actually won the nomination and won the presidency. And there's likely a legal battle to ensue here and recounts and all of that sort of stuff. And yet, as of this point, we are kind of marching forward that Biden has won, and the market has already been pricing some of that in. That caused some of the rally last week. And I got to tell you, the surprise upswing, it has been a surprise to me. I wasn't as confident that a Biden win would be such a positive sign on the markets, and yet there's some euphoria happening right now. So that's one. The second reason I think the market is just popping right now is there again leads to more potential stimulus. There is rumor right now, we're going to talk about it on an upcoming video this week. There's rumor right now that there's already proposal going to draft an automatic $50,000 student loan relief package. Now there's going to be lots of red tape, lots of rules with it, and but there's, I think the market is responding positively to potential stimulus coming along with a Joe Biden presidency. And then the third reason the market's actually popping is the one that you're going to see in the headlines, and that is we all got those of us in the financial news or the financial profession all got word that the very, very positive signs from vaccine from Pfizer, 90% effective, and so that seems to be a sign of confidence that maybe the economy won't be start and stop, that there will be some sustainable activity to the economy despite what's going on with COVID. COVID cases scare me. They scare me, not because I'm afraid of the disease. I'm just looking at how quickly they are rising, and I am unsure about what that means to the economy and shutdowns. My business is talking about potential implications here, and it's just, it's crazy. And we're just at the beginning of November, and here in the Midwest, it's been a very, very warm week, and yet we're still seeing this surge. So those are the three reasons why the market's actually popping. Who's missing out? Will you actually see, when you look at your investments tomorrow, will you actually see a big pop in your investments from today? That's the thing. There are some winners right now today and definitely some losers. If you've been winning this year, you're losing today. Amazon is down over 2% at the time I'm recording this. Gold is down over 5% at the time I'm recording this. The NASDAQ, which is up 30-some% year to date, even though the Dow was going into today negative 1%, NASDAQ's only up 1.5% maybe. And yet the Dow at times has been up near 4.5%, 5% today, over 1,000 points. So the winners are the ones that haven't really been rallying this year. So the Dow, again, of the major indices, is the only one that has still been down before today. So the Dow's getting the biggest boost. Small cap, the Russell 2000 is up almost 5% as well. Started the day up almost 7%. Small caps have been left out to dry this year, have not participated in the rebound, and so they're actually rebounding today, which is great. International investments are up 3.5%, which is great. Real estate is up 3.5% as well. But NASDAQ and gold, so if you've positioned your investments to ride high the winners, to overemphasize the winners, today's been an okay day, except for gold, but it's not a blistering day like we're seeing in other areas. And so this again is why we constantly believe that number one, your investment approach needs to be connected to your overall long-term financial plan, your goals. That's what helps you not gamble with your investments. But then second, that your philosophy needs to be a core diversified approach with a momentum strategy. The momentum strategy has gone gangbusters this year, but today it's probably only going to be up 1% as of right now. But that diversified mix, you've got value doing well, you've got small cap doing well, you've got real estate doing well, you've got international doing well. That diversified mix that's been lagging the momentum is going to perform pretty well today. At least that's what we're seeing right now. So those are winners, those are losers. Why am I concerned? So I get into the office today, I'm seeing that futures are way up and this positive news, and I've got an advisor on my team who actually says, wait a second, one of these indices is not up as much as the others. Yeah, the Dow was surging, S&P was up quite a bit, and NASDAQ was barely up. So this is investing 401, okay? But the lack of breadth in this market rally has been a very, very ominous sign. And where you've got the market is surging, but it's basically been these winners are pulling the indexes to higher and higher levels, but there's not broad participation among the entire market in the rally. Guys, that is late growth cycle behavior. Early or beginning of the growth cycle behavior is everything's rising because everything's been undervalued. Everything's rising, okay? Late stage growth cycle is just this is rising or just that's rising, or it's very, very segmented and what is actually performing well. And even though you can look at today and say, well, gold has done well and NASDAQ tech has really done well, and we've got other areas maybe trying to catch up today. Yeah, maybe, but it's yet another sign that we've got very weak breadth, that there's not as much depth to this rally, and again, it just signals late stage growth cycle, Now, how long could we stay in late stage growth cycle? I'm reminded to back in 2018 when things were falling in the fall, and even in 2019, bull markets don't die from old age, yet at the same time we're in a very long bull market. And even though that bull market broke and we hit bear and then we bounced right back, there are many people looking at the charts, and I sort of agree with this, that well, we went from bull to bear back to bull very quickly, that you could almost ignore that bear in there. That this is still the same growth cycle that we've been on, and now it's just further influenced by all the money printing, and we could see more bubbles created. I think we're seeing signs that this is late stage growth cycle sort of behavior. Could that last for another year, 2 years, 3 years, 4 years? Absolutely. Which is why, as I'm nervous, I wouldn't say you've got to go into protect and go into hide. The people that have done that have been punished by not being in the market this past week. Yet it is an ominous sign, and I would be cautious. So here again, I go back to financial planning. Your short-term dollars should stay short-term. Don't be baited into the market. Your long-term dollars should be invested though, and you should have an investment philosophy that takes the emotion out of it, that didn't wonder or you didn't make any changes whether the election was going to go one way or the other. You had a system that was going to do well and compete for your long-term goals no matter what the outcome was. No matter what the outcome is with these rising COVID cases. Well, it doesn't impact the economy. We've got a vaccine. We're going ahead. Or nope, cases continue to decline. We've got to have another shutdown here. So make sure you're working with your certified financial planner and you've got the right strategy for all the risks and the rewards, as we're seeing today, that are happening out there in the marketplace. You don't have a CFP on your team, or you're not taking that balanced approach, you can contact a member of my team as well. You can find us online, Korhorn.com, that's Korhorn with a K, or even wisemoneyshow.com. You can find us there, or you can always just send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.